Welcome to Alpha Bytes, where each week I sit down with some of the best crypto analysts and researchers in the world to find tomorrow's alpha today. I'm your host, Marconi White, and we've got a show so hot, I took an hour-long cold shower so I wouldn't get burned. I'm going to ask the guys what projects they would bet on to transform the crypto industry. But first, well, Bitcoin's looking pretty limp, and Benjamin's bull bear indicator suggests the Grizzlies truly are in charge. Ray's looking for rays of sunshine in the depths of doomer sentiment. And King Cody, well, he's going to like three projects: the launch of Prisma Finance, USDC native launch on Cosmos, and Ruin proposing Solana as the new chain for Maker. That's making a splash. And I've got a lot more. I've got Ray, Benjamin, and Cody in the studio. Gentlemen, welcome. We're going to kick it off with the market update coming off the predictable news that the SEC has postponed a decision to pause on all the Bitcoin ETFs. Ray, I'm going to turn over to you. Last week, we were riding high in the news of Grayscale winning its court battle. Now it looks like the dollar is above 104 and BTC is under 26,000. Tell us, where do we go next?
We're home on the range. So it's a predictable song that every American will know the words to. And Bitcoin's kind of falling into that same sort of lull. You know, it's playing along with the chorus of home on the range because it continues to range trade. So with the exception of the end of August Grayscale court case win, which was followed by a quick pop up to 28K. And in hindsight, I should have taken my nice little profits that I had on that Bitcoin long I opened up around 24K because now they're much smaller. But, you know, with the exception of that, the market's reaction to Grayscale, Bitcoin price has been trading in the same $2,000 range for a month. So where we were in August, we find ourselves in September. Now, structurally, we can see that the price is supported at the $25,000 level and that there's support at 23.3K. Those are kind of like downside support levels. I guess, fortunately, some hopeful things to look out for are the Terra Luna era CME gap and the volume profile indicator, an indicator which shows how much volume trading happened during a session. Well, they both still show 37K to 39K is our medium-term upside target. But this would obviously require flipping 30K back to support. And more importantly, price has got to get over this resistance cluster at 32K. So my basic observation here is that the market participants are all pretty much waiting for one or two things. Either the eventual approval of a spot Bitcoin ETF, and then we see an incredible sentiment flip and a sharp increase in inflows to the market, or the other shoe dropping is going to be something more macro related. And in my personal view, it's probably Binance blowing up due to some sort of heavy enforcement on the legal side. So it basically feels like we've returned to the same phase of record low volatility that existed before the ETF rush and after the ETF rush began to wear off. And the same with the Grayscale the Grayscale win over the SEC, and the same with all the major partnerships being announced with Solana. So beyond like regulatory specific news, the market's not reacting with lasting impact to big announcements. Price pops a little bit, then it gives back everything or it flatlines. And to me, this is an indication that sentiment and flow are being withheld, suppressed, or sidelined due to a lack of confidence. Now, on the macro side, we've got DXY steamrolling higher. It nearly touched 105 today. Oil's trading above $87 a barrel, and that's after Saudi Arabia extended its 1 million barrel per day production cut. And this, unfortunately, will have or be perceived to have the down the line impact on everything else like transportation, airlines, vacations. And we're moving closer to the fall now where important travel holidays coming up. Or important travel holidays are beginning to pop up. So even if today's headline is purely shock driven and the price impact is transitory, the larger perception could be that we have the return of inflationary pressure. And this is not the perception that the public needs to embrace, nor is it the look that the Fed's going for. And I know our resident macro analyst, TD, has spoken about a lot about his three-wave inflation theory. And so has Ben Lilly. And things like this make me think that, hey, maybe this inflation monster, it's just not done with us. Last thing I'll add is that September historically is a tough month for equities and for Bitcoin. And with Dixie hitting its highest level since March and the 10-year yield rising to 4.25% today, plus there's projections of weaker growth in China and Europe, there just seems to be a bevy of reasons for more upside from the dollar. So like I was saying earlier, in crypto, everyone is pretty much waiting on one thing. And until that one thing happens, or the complete opposite of that one thing that everyone expects to happen happens, it just seems like price rallies will be capped by selling at strategically placed overhead resistance, followed by more predictable sideways price action, and of course the eventual demise of Binance presenting itself as a black swan.
Okay, so we've got what we can see in front of us, which is the Dixie just roaring up, as you said, steamrolling higher, and it's going to put some resistance for not only crypto but also equities. And then you've got the black swan event that everyone that you're looking for, that I think everyone needs to be aware of. So just a lot of resistance in front of us. Benjamin, I want to bring you in here. Do you see the market the same way, or are there other data points that you would add that suggest that maybe there's a contrary perspective to have to what Ray shared?
Well, I don't see much of a contrary perspective right now. Although I see that we probably could just end up being sideways for much longer, for the entirety of September, even perhaps. And depending on any further news or event-driven updates that we may get in October, that might help push things up or down. But right now, the market does not want to move at all. That's where we stand. And that's very much reflecting in liquidity, it's reflecting in volume, it's reflecting in user activity, it's reflecting in number of traders that we could see on chain, because on chain as well, when it comes to even Uniswap and other bot traders who have been popping up on the on-chain side trading, even that volume is going down. So when activity uniformly goes down and that coincides with September, typically it's bullish to not expect anything during that month. I'd rather not bet on a steady direction to follow for the entire month, but rather probably it's better to just take a break, relax, and continue building. That is what I'd go with for a September at least.
Right. Yeah. Okay. Continue to build. You know, we actually talked about that a little bit last week. And Cody, I think you actually mentioned that the best way to get through the winter for you was just focusing on building. Absolutely. And we'll get into that a little bit later in the episode, talking about some of the innovations and building in the space that we think would actually transform what we're looking at here. So I don't see any real reason to be bullish at this point. I think right now it's about protecting the downside and really looking to not catch any knives. Ray, just in the last 30 seconds here, is there anything else you'd want to add from a market update perspective?
Chop will chop you up, and trying to trade chop if you're not a super trader or using an effective algo will just reduce your dry powder that you wish you would have had when it's time to deploy. So when the market turns and finds its strength, that's when it's easy to make money. That's when it's easy to get those outsized gains in a short period of time or even in a long period of time. So the phrase, the trend is your friend, you know, it's not a catchy phrase for no reason at all. So like Ben and Cody say, it's just time to just bide your time, chill, study the market, go outside, touch grass, as they say.
Touch grass.
And wait. Okay. It seems to be only a few months before we get an ETF approval, really. I mean, it's either going to happen or it's not going to happen. So what's a 1, 2, 3 month wait?
Absolutely. It's funny, in any other space, we talk about waiting, and you know, you look at months and you think, well, it's really not that much time. In crypto, it feels like decades or longer. So, but I think that is good advice. Don't try and buck the trend and just wait for the wave and just get it when it arrives. So, okay, well, not the most uplifting market update, but on this show, we like to keep it real. We like to be honest with our listeners. And if you're out there and you've been around a couple of weeks, you haven't liked and subscribed to the episodes, we'd love for you to do that today. We continue to grow the movement because this will eventually change, as Ray just pointed out. We're going to have those waves, and when they do, we're going to be giving you even more alpha that you can listen to. So go ahead and hit the like and subscribe button. But now let's move on. Benjamin, I think you have a metric you're going to share with us that I think just really puts even more clarity into what the market's looking like right now. So tell us more about your bull bear indicator and what it's showing right now, Benjamin.
So the bull bear indicator is something that we have also covered for quite some time. We made it in the last cycle, I would say. And what it is good at is defining where the market regime is. Are we in a bullish market regime, or are we still in a bearish trending regime? And the thing is, ever since January opened up this year, and it was starting to trend in the bullish side of things. And after the consolidation that we have had for the past couple of months and the drop we had in the past few weeks, now it is in a bearish territory. Now, what happens every time this goes into a bearish territory is that it rarely pops back up into bullish territory anytime soon. Like, it takes months. So this was something I was quite scared about. I didn't want it to drop below that level, because when it does, it literally takes a few months before it can pop back up and start trending back again. But the thing is, it's also doing exactly what it did in 2019 cycle, wherein after the August period, after the Z pump and dump that we saw, this metric dropped back into the bearish sector. And then only in April of 2020, it started turning back into bullish. So given that logic, and given that we are seeing also halving to happen somewhere in April or May next year, I think we are in sync in that cycle. So for now, it means that probably we have to take a step back from buying the dip aggressively. We have to watch out for event-driven situations to affirm our bias. And I think there are going to be more opportunities to get in. I would not look forward to swing positions right now. That's my observation when it comes to this metric. But basically, it's caution everyone.
So that's just adding confluence to what Ray just shared in the market update, that this metric, which I guess is giving you pretty good confidence for where we are in the market movements. Let me ask you a question, Benjamin. How do you see a change in market structure impacting a metric like this? When this was built, let's say during the last cycle, you didn't have an ETF that was, I mean, we obviously didn't have one already in the market. Maybe some of the buyers or some of the larger market makers hadn't really joined yet. Do you expect this metric to continue to be relatively useful and its utility be relatively high as the market structure changes?
Actually, I expect its utility to be even more higher when these changes come in, because when these ETF and market makers come in from the traditional space, you're going to see a drop in volatility, which is also going to result in diminishing gains. And that is something we know anyway about Bitcoin. As time goes, we are going to see a diminishing gains when it comes to the percentages, but it also makes it more stabler to invest on, right? So the trend will last longer, whether it is bullish or bearish. That's what BTC will become. So it will either end up in a longer bullish cycle, or it will end up in a longer bearish cycle. So that's how it would end up trending. And it will be much more easier, in fact, to predict, guide, judge using this metric, because it's all about macro. It's not about what happens on a lower time frame. It's more on daily and weekly levels, on the structural changes that happen. And if more liquidity comes in, to be honest, actually price will change. It will diminish in the amount of volatility actually. So volatility diminishes in two cases. When there is no liquidity, you don't have traders, you don't have much of bid and ask movements. So price doesn't move. On the other hand, when you have too much liquidity as well, and basically the market makers are fighting with each other for getting the best of ask and bids, price starts to consolidate at that point as well. So one way or other, the metric captures the overall phenomena underneath, and it will only make it even more easier for us to deduce whether the trend is flipped or not. So it's actually much more useful at that point.
Okay. That's actually really good to know, because we've reviewed several metrics and we've asked that question. I mean, one of them was in response to looking at the Ethereum Bitcoin dominance chart, or the price chart, and expecting some kind of move down, and talking about how now in this cycle we have so much of Ethereum that's being staked and actually acting as sort of a sinkhole, if you will, for price. So it wouldn't necessarily have the same dramatic movement. So always asking that question, keeping top of mind that some of these metrics can change over time. But it sounds like this is one that you're going to continue to keep an eye on.
Yep, absolutely.
Okay. All right. Well, no, that's really good to know. So if you're someone listening here and you wanted to get your eyes on this chart more regularly, is there any place where people could go to see that? I know we're going to be doing the audio and the video, and it's coming soon. I'll share more at the very end of the broadcast on that. So if you haven't already, I'd like and subscribe so when it's ready. But other than hearing it and seeing it on this podcast, is there anywhere else where people could see this?
At the moment, we have not posted public, but we're working on something that a lot of people are going to love it, and they're going to have access to this metric.
I'd love to hear it. We have builders on the show, not just chart professionals. So, Benjamin, I'm glad to hear that it's going to be somewhere where people can see it. Ray, we got about a minute left. I want to ask, do you have anything you want to add, or any questions you have for Benjamin?
Yeah. So I agree with what Ben's saying, that what we're looking at is a more prolonged shift in the trend here. And I like the way that you're looking at the bull bear market indicator with like a higher duration, a longer time frame than one would look at like the fear and greed indicator, which is just a kind of like a in that moment short term type thing. So I think on the charts we also see the same sort of trend shift beginning to happen. And one thing that I noted was that the whole moving average, the HMA, on the weekly, it's turned red for the first time ever. It's been green. The ribbon has been green and bullish since price fell to like 15,000, right? So it from 15,000 all the way up to 32K, it was green, and it's just now turned red, the ribbon, which shows basically trend and momentum beginning to flip over. And on the weekly, Bitcoin has lost that 20-day moving average. It's trading below it now. And then also another thing that kind of like that I noticed as you were talking was that on the weekly, the RSI is also in the mid 30s. It's trending below 35 right now. That's on the daily. And then on the weekly, the RSI is still down. It's dipping below 44. So just like you said, this kind of rollover in Bitcoin's momentum and price, it might not be as temporary. All dips might not be for buying. I tend to agree with you on that. It's either going to take the ETF to really turn things around or some sort of positive catalyst to turn things around, or it does look like we'll be sinking deeper into this trough.
3 minute, 1 minute, Ray. You moved from 2 minutes to 3 minute, Ray. This episode, I like that. No, but I think you raise a good point. This is a time to be more cautious, I think, is what the way I'd summarize kind of what you're sharing, Ray. All the indicators suggest this isn't a time to be buying a dip.
Yeah, through all the dips, the HMA had stayed green. The fact that it's showing a red ribbon now, that this is a slow moving indicator. So the shift in momentum is notable.
Benjamin, last word. I'll give you 30 seconds before the producers are going to cut me off.
The ETF argument, well, I agree with it, that if ETF gets approved, we are going to see a massive shift to the upside, whether it is news driven or actual liquidity comes in. It could be a variety of reasons, but an ETF approval, definitely it's bullish, it's going to make news. And I would love to be long at that point. But the question is it worth it trying to front run it? I think it's not.
Okay. Yeah, so I think I'm hearing
it's better
caution.
to wait and get approved. Yeah.
Right, yeah. Hearing caution across the board. There's no need to ape in right now. So I think that's, again, good advice for those who are looking to routinely buy the dip. Not that any of this is financial advice. We're sharing our views on just how we see the market and what we think is something to consider for your own trading strategy. Okay, Ray, I'm going to move it over to you because we were just talking about the sentiment and how that's changed. And we have had some very interesting news come out. We just talked about the ETF, but there's some other items that are on the sort of flashing across headlines, which in general market, that would probably mean some price action. We're not necessarily seeing that. So tell me, what's on your radar? What are you looking at?
In the last 2 weeks, Solana has been populating headlines in a positive way. And that made me wonder, does anyone notice a water droplet being added to the ocean? And how much does it matter? Like, how relevant is it if one drop of water falls into the ocean? I'm sure in the wider scheme of things, it is meaningful. But then when you factor in like evaporation, maybe it's not meaningful. Scientists would sit down and debate that all day long. But I mean, Solana's been doing things. They've been establishing some partnerships. So in the last 2 weeks, Visa broadened its partnership with Solana. So you can now settle Solana in USDC. You can settle USDC on the Solana blockchain. And they're collaborating with WorldPay and Nuvi, who are merchant acquirers. I don't know too much about them, but that's what the headline says. So WorldPay and Nuvi can now receive payments in USDC directly, while customers make purchases using their Visa cards. Another positive was Solana Pay, which is kind of their decentralized payment protocol. It's on Solana. They integrated with Shopify. There's millions of businesses that use Shopify as a payment solution. So if you think about, blockchain and stable coins and all that, it's positive. Sometimes looking beyond these headlines, it's just like we're using the blockchain, but it doesn't mean anything for token holders. It might not even mean anything for stable coin holders, but hey, it looks good, right? And then Coinbase recently took a minority stake in Circle. So I guess the interesting thing here is that stablecoins are super lucrative. Traditional businesses and the Fed and central banks all over the world seem deeply threatened by stablecoins, but also really interested in the market cap of stablecoin and how much fee revenue they generate, and they're looking for ways to emulate or tap into that. So yeah, Solana's doing things. Is it impacting the market? No. So Cody pointed out that Solana price is up 5 or 6% today, which is great. And most of the market was slightly green and single digits today. But on the wider time frame, I don't know that these partnerships in the short term have lasting impact for Solana holders. So without trashing Solana, I just think the lack of reaction in Solana price to these major announcements, which have come back to back to back in the last 2 weeks, I think it's just a reflection of the lack of confidence investors have in this market and the muted inflows that we're seeing come into this market. So my hope would be that when we're in a bull market or whatever, when ETF is approved, because that's the thing everyone is kind of hinging their hopes on, I hope that these partnerships will have greater impact in a positive way for the Solana ecosystem and blockchain.
There's a lot to unpack there. The part that I guess most hits me straight in the face is that Solana has continued to build. I remember, I would say a couple of years ago, where there was a discussion of Solana just being a VC chain, nothing really happening on it. There was a lot of, you could call it, for lack of a better word, haters on the product. And, prices obviously come down. It's reverted way down from what it was. I don't know the exact amount, but maybe 90% down from its all-time high. But the team appears to be continuing to work. I mean, you just talked about some partnerships. We're going to talk, Cody, get your take in a minute on Maker potentially using it. Then we see it being used to settle USDC payments. It sounds like they're continuing to build. Do you, I guess from your perspective and what we just talked about, not wanting to catch a knife, not wanting to buy the dip, how do you see someone who wants to build a position in Solana? Where do you think that they start to do that? Do they just do a straight, doing an average right now, where they're just doing a little bit of buys here? Or do you think that they look for sort of the market to settle before they start to build that position?
Oh, go ahead.
It's a good.
Yeah, go ahead.
Sorry. No, I was just going to say that I think it's a good time to DCA, and for Solana it has been for basically all year. I think anything below 20, it looks, I mean, you're not going to be an instant profit. That's for sure. And the closer you can get to 10, the better. But anything below, I think it will be a good decision in 1 or 2 years. I think the lack of action, as you said, you guys discussed, speaks to how the market is right now. There's not much volatility going around. Market is scared. And I think also traders are scared of the negative flows that are going to come likely in a few weeks. The FTX state is thinking of selling the majors that they have, or at least some of them, and selling their Solana position in trenches through the next few months. So it looks like everyone is kind of scared to beat anything, especially Solana. But yeah, I think if you're a longer term investor and if you believe in Solana, this is a really good opportunity to build that position, because it looks like you'll have plenty of time to beat. And I think any dips, any major dips that happen, especially on Solana, are good places to buy. The token has been battered down much more than any other major because of the influence, so to say, of SPF and Alameda. And yeah, as you were saying, I think the top price was $260 almost, and it came down to $8 when FTX crashed. So yeah, I think anything that comes close to that is God-given gift
just a really good opportunity.
Yeah, and as you said, the team is building, and it's not just the team behind Solana, which have been working tirelessly since they launched, but there's also a lot of founders and a lot of engineers that were they were enchanted by Solana, or they were they believe in Solana. I think they've decided to work and build there because it also presents a different view than Ethereum. And I think we sometimes get too focused on just what the view of the Ethereum's view of what crypto should be, and I think it's good to have different opinions, so to say, and be able to build on them.
No, that's actually a great perspective. Ray, I want to bring it back to you just for a last minute, just for a response there. We've talked a lot about looking beyond the headlines and looking beyond the price to try and find good fundamental projects. And we've talked about Solana a couple of times. Cody just made the case. The team continues to build. The price has dropped significantly. The product seems to be picked up in a variety of ways. How would you look at whether or not this is an L1 worthy of investment? What kind of framework would you be using to evaluate that?
Well, I think some positives are Solana has diverged from the same coin reputation. That's massive. And they're building in DeFi, NFTs, perpetual markets, and that's a big positive also. Like Cody said, with the FTX selling and the upcoming centralized exchange troubles possibly with Binance, this asset and all altcoins and all cryptocurrencies could be primed for more downside. From the TA perspective, recapturing the 20-day moving averages, the 200-day moving average, the 50-day moving average, that would be positive. Seeing price have successive closes over $30, multiple days of closes in the $30 range would be great. Doing the same in the 40s would be a trend reversion or a trend reversal, and then it's uptrend only from there. But on the fundamental side, I want to see more users going into the blockchain, activity in DeFi going up, new wallet creations going up, wallet balances going up, Solana or native Sol being staked across the ecosystem, the Solana ecosystem going up, cross-chain bridging into the Solana ecosystem going up, LSD synthetics within Solana, whether it be Solana coin itself or Solana ecosystem coins that are being staked. We want to see that go up. You know, you want to see things on chain that show more users, more stakers, more activity, more transaction fees being generated, more interoperability and like money exchange or money flow between Solana ecosystem projects. Seeing all that on the DeFi and on the on-chain side will kind of back what you see happening on the charts. Sometimes it actually happens before. All the activity happens as a precursor before price action. Then we should see Solana trading volumes, exchanges, and within DeFi rising. And lastly, in the Solana futures markets, we should see open interest begin to rise, and then try to identify how is that open interest positioned. Is it on the long side? Is it on the short side? Like, it's always balanced, but we want to see who's like trying to exert their supremacy within futures markets. So just seeing more inflow into Solana futures markets could also be a positive.
Okay, that's a lot to unpack for any listener, but I actually think that that's exactly what you need to do when you're looking at building positions in any of these projects, because there actually are a lot of indicators beyond the headline price that suggests whether or not it's going to be a project here for the long term. And that's what we talk about often here, is just the sustainable project. So now, good feedback. I think something for anybody who's listening, and for anybody who you think should listen, that should be hearing this podcast, to be able to move beyond the hype, and again, move beyond the price. All right, Cody, we're going to shift to you with your 3 like it or spike it. You got some good ones today. Are you up? You ready?
Yep, let's do this.
Okay. All right. There's the enthusiasm I always expect. He's usually sleeping in the sidelines waiting to be brought up, but he actually jumped up early today. I love it. All right. The first one we got here, Prisma Finance, a LST-backed stablecoin launches. Like it or spike it?
Like it.
All right. Unpack it for us.
So Prisma Finance is yet another LSD stable. The idea here, again, is that you give your LSD token, so your staked ETH, your fractured ETH, and you give it to the protocol exchange for this new minted stable. This stable is called MKUSD, and for now it has seen quite a bit of usage. The pools are capped at 22,000 ETH, I believe. So there's like 37 million in collateral and 20 million stables in circulation. But the pool was like the limit was achieved basically on the day that it launched. And this is because of the backers of Prisma. Curve, Convex, basically the kingmakers of the stable space are the ones that are backing Prisma. So everyone is kind of expecting Prisma to be successful. And I think they really should be successful, like seeing how they can work within Curve, and probably they will be incentivized by Curve and also by their own token. They have a VE token called Prisma, and it's the same idea behind Curve. You lock your tokens in exchange for being able to control the emissions to your respective cores. So the idea is that the LSD protocols will buy Prisma on the open market and then use it to control emissions to their pools and see if they can incentivize usage of their own LSD. The only thing is, when Curve enabled this, they were already successful, and Prisma is not yet successful, and there's already quite a few LSD stables out there. So I think they have been a bit late to launch, and this will not work in their favor. But yeah, looking who is backing them and looking how they will likely incentivize their token and their protocol, it's on them to win. If they drop the ball, then someone else will take it home.
What do you think is their edge that's really going to make it that they're going to be able to take the ball from anybody else?
There is nothing that makes them stand up. The like all of these LSD backed stables, they are the same. You give your stake ETH and they give you a stable back. And at the end, it basically comes down to what is secure and what incentives are out there. And yeah, there's I think we've mentioned this one back before. The Prisma Finance is the LSD stable to beat right now. They have like around 150 million in circulation and over 300 million TVL, and they've been the most successful by far, but there have been quite a few. And yeah, there's not much that separates any of them from one another. So I think Prisma has a really good chance of succeeding because the folks at Curve know how to incentivize and basically how to get people to use your product. And yeah,
okay. So
that's why I think
really
it's on them.
Building that incentive model and using it as a magnet to get people. So, all right, well, we're going to add it to the list. We're going to check back in a couple of months and see how it's performed.
Yeah, and unfortunately, there's nothing that excites me on the tech side. If there were, like, I would be more comfortable saying that they will succeed. That's why I'm like, maybe they launched too late. Maybe they don't do the incentives right. We'll see.
Right, we'll see. Okay. All right, well, we're moving on to another one. USDC native launches on Cosmos via Noble app chain. Like it or spike it?
Like it.
All right, unpack this one.
Okay, this one's big. Up until now, there wasn't native Cosmos on any, native USDC on any Cosmos chain. This means that Circle was not issuing USDC on Cosmos. What was happening until now is you had to bridge it. And there were a couple projects like slash app chains that were doing this. They would get USDC from Ethereum and they would bridge it to Cosmos. They are Gravity and Axel are the main ones. The thing is, it's not official USDC. You cannot redeem it at Circle. You have to bridge back to Ethereum and then redeem it. And also, it's not great for liquidity. It's not great for interoperability because they are not fungible. Like if I have Gravity USDC, I cannot, like it's not the same as Axel USDC. I would need to exchange them and get either of those, whichever I prefer. And it's the same if you're swapping it for another token. They are just not great. Their bridge tokens are never that great. So I think it's great for Cosmos that finally they're getting USDC on Cosmos, and it's going to be issued by this new app chain called Noble, which their single purpose is to issue tokens for Cosmos. And they are starting with USDC, which I think is great for them. And just to get some color on like the sad state of the stables on Cosmos, there's a total of $125 billion in stables, and almost 70 billion sit on Ethereum. And on chains that are somewhat active, like Arbitrum and Solana, there's 1.5 billion in each. On Osmosis, which is arguably the chain in Cosmos with the most activity, there's only $5 million in stables. So it's just not great. And yeah, it's good to see that they are finally doing something about it.
I was going to say, it sounds like a lot of upside if they can get the incentives correct and maybe some of the other apps on the chain or some of the other improvements, because we've talked about Cosmos several times in the last couple of episodes about some of the opportunities that could attract more attention.
Yeah, they're launching also, and some app chains are launching now, or like they are going to be launched soon, that are focused on DeFi, like Say and DYDX, which are focused on trading. And I think it'd be really good for them to have native USDC on the chain. And yeah, it will all be good for the Cosmos ecosystem as a whole, for sure.
Got it. All right, I like that one. All right, we got one last one here. Ruin, Maker founder, proposes to fork Solana as the back-end new chain for Maker. Like it or spike it?
Like it.
All right, this is fascinating. This sounds almost a little controversial. So there's a lot to unpack here. Let's do it. I want to hear what your thoughts are.
Yeah, it's a spicy one.
Like it. Yeah, it's spicy.
Yeah, Ruin definitely stirred the pot with this one. So for those that don't know, MakerDAO is maybe the most successful stablecoin issuer, like decentralized stablecoin issuer. They are the creators of DAI, which right now is sitting at $5 billion in circulation, and by far the most circulation of any of the decentralized stables. And they have a sort of a master plan for the next few years. And the last step in the master plan is to launch a set of L2 or new chain. It was never decided exactly where it should sit on or like how it would be. But basically a new chain that would act as the backend for Maker. And Rune just, I think a couple days ago, posted on the MakerDAO forum that they really should build it on Solana. And this came to a surprise of everyone, myself included. I think everyone was thinking that they would launch a sort of L2, EVM-based, maybe a Cosmos chain, but definitely not Solana. And the reasons that Rune says why they have chosen Solana is that it's a highly optimized blockchain, and it's made to be like a monolithic blockchain that is like everything sits on the same chain, and it's as efficient as it should be. It also scales with hardware. And one of the really good things about Solana that makes it so efficient is that it has parallelization. So basically you can run multiple quote unquote commands at the same, or transactions at the same time. And second reason is it has proven great resilience even after the FTX debacle. As we said before, people are still building on it. There's still teams that are incentivized or like they're excited to build on it. And there's also a few instances of Solana being forked and acting as a new chain. One of them is Speed, which is like it's like a chain link for Solana, so it works as an oracle. And yeah, I guess the idea is that they can look at what they are doing and follow a similar path. And the POC has been proved, like it has been proved that you can do it. I don't think anyone was expecting Rune to say that they were going to build on Solana. One of the people that got caught off guard and were not impressed was Vitalik, which after Rune posted this, he dumped his MakerDAO and started posting on the forum of one of MakerDAO's competitors, Dry, which we really like, but hasn't seen that much success. But yeah, I don't know. I'm excited to hear people wanting to work on Solana on the SVM in general, and also forking Solana and having it run as an app chain basically, and have the backend for another, like the backend for a protocol sit on Solana or another chain. You could also do it on Cosmos. Sommelier is doing that, and then your front end, your product is sitting on Ethereum. So I think we're going to be seeing more of that as well.
Correct me if I'm wrong. I thought part of what Rune also said was that he actually had high praise for Ethereum, but what I interpreted from that messaging about Solana was really the technical debt that exists in the code for Ethereum, because it's had to build up over time, so it's layer on layer, whereas Solana built at a later date is just more efficient. But he still seemed to have very positive remarks about Ethereum, right?
Yeah, absolutely. Like the product is still going to sit on Ethereum. DAI is going to sit on Ethereum. Maker is still going to sit on Ethereum. And like, it's not like they are moving the product somewhere else. They are just going to use Solana as the backend because, as you said, it was built later on. The technology was understood better. As I said before, you can run parallel code on Solana. That's one of the biggest things about Ethereum that like makes it less performant, and a bunch of other things that make Solana, like tech-wise, it's better. It's not to say that Ethereum is not good, but Ethereum launched very early on compared to Solana, of course, and like they've been trying to patch some things, but it's never such a good solution to try to patch things as to build a new thing once you have figured out some of the issues that were playing blockchain. So yeah.
Well, it's going to be fascinating to see. I know it's a proposal, but Rune holds a lot of sway over that environment, so there's a good chance that this actually ends up being what is used. Is that a fair statement?
Yeah, it is, but it's still also years to come. So yeah. What we'll see. Maybe Solana is not around by then.
I think based on what we were just saying in some of the partnerships, it sounds like they have a future. We can't say how rosy it's going to be, but it sounds like they're going to be around.
I would bet that they are, but you never know.
Yeah. All right. Well, thank you, Cody. It's always good to hear your perspective on these different projects. Let's move on to a sort of different topic. One of the things you can do whenever the market is not giving you the kind of action you want is to really focus on the future. And that's what we're going to do for the remainder of this episode. We're going to talk a little bit about Coinbase CEO Brian Armstrong, sort of his wish list for what he hopes that would be built in this space. And then I want to turn it over to you guys and hear what you guys would like to see in the space that we built and something you bet on. So for those who missed it, Brian Armstrong, CEO of Coinbase, came out and he listed 10 separate project areas that he thought people and project, rather developers could be building in this space and add a lot of value. And there were a few that kind of stuck out to me that I wanted to share with the team and just kind of get their perspective. So the very first one was the first one that Brian talked about, which was Flatcoin. And to break that down, we talked a lot about stable. Obviously, Cody just shared how stables are being used on these various chains. Stable coins are tied to a fiat currency, which means that they're supposed to be pegged to that currency. And that means they also suffer from inflation. And a flat coin, in theory, could be pegged to something more like purchasing power, so that as your purchasing power moves in relationship to inflation, it could go up or down rather than just a simple peg to like the dollar or the euro. So he mentioned a couple of projects, one of them being Ampleforth and Spot, Nuon, and Truflation. And Cody, I want to start with you because the idea sounds very attractive, the notion of a flat coin that really helps maintain purchasing power. And we've seen adoption. You just mentioned sort of the billions of dollars that sit in stablecoin. But the flat coin idea seems like it's got some difficulties, it has some obstacles in front of you, because you've identified that even though it's an interesting concept, it hasn't really worked out in the real world. So why don't you walk us through what you've seen to date?
Yeah, so as I said before, Vitalik really likes this project called RAI. This is exactly what Brian Armstrong is saying, that we should build a flat coin. It's basically a stable coin, but it's not pegged to the value of any currency. It just stays somewhat at around the same value, and it does this by implementing something similar to PID controller, for those that know some electrical engineering out there. And it's been quite successful at that. Like it's been behaving like really as expected, basically. And it's been oscillating around like $3 and $2.5 of value since it was created many years ago. It's worked really flawlessly, basically, but it doesn't have product market fit. People do not like it. It has a market cap of less than 7 million. So yeah, you compare that to like USDC or USDT, it's not there. I think it peaked at like 100 million back in the day in the bull market, and it's been down ever since. And I like it. I know Vitalik likes it, but it doesn't seem like people at large like it. So yeah, I don't know if we're going to get anywhere with that.
Yeah, what's interesting is that the case here is that you're going to have inflation risk if you have it sitting in stable, but I think the opposite side of that perspective is that people that are using stables outside of, let's say, the U.S., like if you're using them in Turkey or using them in Lebanon, using them in parts of Southeast Asia, the dollar is actually acting as an asset to you, right? Because it actually is strong for your local market.
Yeah, and that's another thing. Like, not just that, but like people don't necessarily want like yield baked into the currency. Like they just want to hold something that is stable and the price doesn't change. They know that it's not complicated, it's simple. This is equal to $1. And then if you want to add yield on top, then people can choose to seek that if they want. Because the other idea of like having a stable that is like a stable that like increases in value with inflation has also been tried. And again, it hasn't really found much success. I think one of the reasons is because you cannot really, like people don't seem to agree on what inflation is. So yeah, you can track official CPI, you can track through inflation, but like your inflation is never the same as my inflation, right? And I think people just would rather be offered yield through, say, bonds or like ETH staking or whatever it is, and yield on top of an actual stable asset than have an asset that increases in price. And yeah, like as I said, it's been tried before. Fragstrade did it. It's called FPI, like the Frags price index, and it has a market cap of $90 million after a couple of years that it's been on the market. So again, people don't seem to like it or want it.
Yes, my game picked up. Okay. All right, let's move on to the next one. This was actually the 8th project or area that Brian was excited about. It was on-chain gaming, and he mentioned a couple of different concepts about player ownership, just being able to take your NFTs and be able to port them into different projects. And I think there's a lot of excitement from people that are building in the space, but you know, there is a question of, is it really going to make its way to the stage, right? Is it really going to be that exciting? Benjamin, I want to hear from you. You had mentioned before, you had some perspective on here and whether or not it was whether you thought it would actually get some traction. Do you want to share your thoughts here?
I'm quite skeptical on that. I'm really not sure whether it will gain traction or not, especially given current market conditions. We'll have to wait and see, to be honest.
Do you see it just in terms of the concept of moving NFTs around to different environments? And we talked about some of the incentives, right, that we saw with Axie Infinity, more of the play to work or I guess play to earn model. It seemed to have fallen apart. So it seems like there was a lot of hype there that didn't really play out. Now it seems like the hype is, people want to move their skins around, or these assets that they have in these games around. Do you see anything, do you have a perspective on whether or not that would actually gain traction? I know you just mentioned we have to see it play out, but do we have any analogs that would suggest that it's going to?
One problem is that the problem with Axie Infinity was not about whether they were able to move things faster or not. Is also about whether the users were happy playing the game. At one point, it became like a farming situation where people were just playing the game to farm more and more NFTs rather than having fun with the game. One thing that these platforms need to solve is that, okay, I come in, I'm playing the game, I'm having fun. And that makes me buy more and more utilities, more and more skins, more and more NFTs. And for that, it needs to be really fast. So which platform or which blockchain should I implement to make this asset transfer really fast? Because I'm in the middle of the game and I need to buy a NFT gun, a gun NFT, however we could call it as, but I need it fast because otherwise I get killed, right? So that's when the speed comes in. The biggest problem is to solve whether the user really needs it. Your user really likes playing the game, and then will he really buy? And if he buys, how fast can he go? So that portion is where the utility and the speed of the blockchain, whether it is Ethereum or AVAX or Solana or Polygon, the argument comes in at that point. So that's what I take from Axie Infinity and why it basically died down at one point, right? Because people got exhausted of the game. So retention is a big problem in the gaming industry.
Sure.
So that's why I'm not sure how this plays out.
Oh, fair point. Ray, I want to bring you in here. Do you share that perspective? I know we were talking a little bit offline about the gaming industry. I think today you've been a little bit skeptical of whether or not it would actually gain some traction.
Yeah, I have to agree with Benjamin. I like, blockchain-based games, but I think everything needs to be all the crypto stuff needs to be on the backside. So the wallet creation, the transfer of assets, all that sort of stuff needs to be almost as seamless as FriendTech had been, which I think is what made it kind of sticky at the beginning, is that it was really easy to just get it going, connect it to your Twitter, boom, you're good to go. Of course, you had to bridge some money on Base to an Ethereum wallet, so it did require a certain degree of being native, but it was still effortless compared to what you have to do in other parts of the crypto landscape. So blockchain-based games are going to have to do the same thing. And like Ben said, I think the skins or the assets need to be platform agnostic, blockchain agnostic, and kind of like interchangeable and easy to trade for game players. And like real world games where what you win in game, even if it has value, it's like it needs to be an incentive. So the game has to be fun, and the assets that you receive need to have use within that ecosystem and value to people who are operating within that ecosystem. The financialization of gaming takes away the fun. It brings in speculators who are more about trying to find ways to extract profit, not stay within that ecosystem and advance as players and as members of the community. So they've got a lot of work to do, and it's a crypto problem. I guess it's a problem that any project would have in any sector, which is gaming as an industry is already massive, right? And it's hard to break in. It's already really saturated, and people's attention are already taken up by things that are already working, legacy games, legacy platforms and such. So breaking into that and diverting those traditional game players' attention is going to be challenging. So, Tesla struggled to break into the electric car market, even though they're the leaders of it. All the other car manufacturers are themselves struggling to make that transition. They're struggling to convince people that this is the way forward. They're struggling to produce enough when people want them. They're struggling to sell them off the lots when they have too many. So competition's tough, you know, and I think blockchain gaming is going through those same sort of baby steps.
All right. Well, it seems like we've got a little bit of skepticism for maybe some of the areas that Brian is a little excited about. We did have one more here on tokenizing real world assets, but we are running out of time. And I do want to ask all you guys a different question. So we can look to wrap up at that. So Brian presented his 10 projects, and I want to hear from each of you. what is the single greatest innovation that you would bet on in this space? Cody, I'm going to start with you.
I mean, I don't know if I would bet on it, but it's the one that I want to see succeed the most, which is ZK-enabled privacy. I think the main setback, or like the thing that wasn't worked that should have been worked in on Bitcoin was privacy. I know it couldn't be done at the time, and it was in the plans, and yeah, it hasn't been done to date. And I'm not sure we still have the technology to build something like that, but I think ZK technology might enable that, and I think we really should work to have that, because like up until now, if you and me transact with cash, like no one can see it, right? Like I don't think anyone should be able to see it unless there's a reason for it. Like if you have, like if a judge says that yes, that transaction you should be able to like spy on someone because they pose a threat to national security or whatnot, that's okay. But I think we should fight to remain for transactions to remain private by default and not be public by default as they are right now.
So you're betting on privacy. Okay, I like that. Benjamin, I want to come over to you. I'll give you a minute. What is the single greatest innovation that you would bet on in this space?
It's the onboarding side. I'm betting big on solving a lot of Web3 onboarding problems, and also how we take the next step towards bringing dApps to mobile users. Majority of Asia is still mobile users when it comes to internet. And in the last cycle, we were not able to penetrate DeFi and NFTs to those users. Right now, what I'm starting to see, and with Friend.tech being an example, with how they're doing the progressive web app structure, which can basically bypass Apple Store and Android Store to land up on people's mobile phones, and they're able to basically containerize what you get as a web app into the mobile phone. Like they're going back in time to take up a technology which is very old and now bringing it, because it's now acting as a solution for a lot of crypto dApp projects. And this is a very healthy step, because now all the revenue will directly go to the platform and it doesn't have to go through the Apple Store. And also, the Apple Store is establishing a lot of gas fees and so on. So basically, when we make it easy for our parents or for our grandparents to onboard into the Web3 platforms, then you are going to see much more user retention. And additionally, when it is easier to track the system with their mobile phones, they're going to like it. They're going to feel less anxious, and they're going to feel they can stay more connected and retain access to the platform. I think that will be one of the biggest challenges. A lot of platforms are trying to tackle it, and I'm very bullish about it.
Okay, onboarding. I cringed at the idea of my mom onboarding and seeing some of the memes that we post, but I like the idea of making it a little bit easier. Ray, I'm going to give you the last word. I'm going to give you a minute. What is the single greatest innovation that you would bet on in this space?
It's not an innovation, and people are probably going to hate me for saying this, but I need more trustworthy Bitcoin custodians to intake Bitcoin and then offer collateral for that, whether it be stable coins or US dollar or other fiat, direct to consumers. So if you look at on-chain data, you see that a record amount of Bitcoin holders, that metric continues to rise. You see more and more people adding to their Bitcoin pots. Numerous companies are holding large Bitcoin treasuries. Listed companies, Bitcoin miners are holding large Bitcoin treasuries. So I personally would like to be able to unlock some of the nailed down cash that's in my Bitcoin position and use it for in real life stuff. And as Bitcoin's volatility begins to taper off over time, and we get more adoption of the asset as a store of value on the institutional side, then I think that you'll see more and more holders or investors become holders. So finding ways to just collateralize that and put it to use elsewhere would be a big step forward for Bitcoin. And it's something that would provide a lot of daily use to people that are holding that asset. So I view it as innovative, even though it's nothing revolutionary.
Sometimes innovation could just be about adoption and actually getting it to the people. Benjamin, this is your second or third show. It looks like you've got a point to make, so I'm going to give you the floor to wrap it up today. What do you want to share on Ray?
Actually, I love the point that Ray was making about generating access to collateral, using his collateral to get liquidity, right? I think this is what ETF will basically end up achieving. People will go in, they'll buy in the ETF, and they're able to now take it and put it in a 401k, use it as proof to go to a bank, borrow liquidity, and then they're able to go and do whatever they want. This paves way for that, and in a much larger scale than we would expect. So it's very valid point Ray is making, and we can definitely see ETF actually being a solution for that.
Yeah. Well, we're going to see, because I think come hell or high water, we're going to see an ETF finally get approved, and then we can start to see that infrastructure build out. But with that, that's going to do it for this week's show. I think there's some very interesting points that you guys are willing to bet on. I'm excited to see if those continue to play out, the privacy, the custodian, and then the onboarding. I think all of those are actually needed. So I'm going to put my hat into all three, and that way no one can call me out if I get it wrong. But as I said, that's going to do it for this week's show. I'd like to thank this week's guests for sharing their insights. I got Ray, Benjamin, and Cody. Gentlemen, appreciate everything they shared today. A lot of interesting information in terms of where the market sits, as well as where it can be going if we start to build. So for all you out there, if you can't wait a week for the kind of alpha you just heard, I suggest you follow these gentlemen on Twitter. It's where they're sharing, or X, I guess as they call it today. It's where all the kids are at. They're sharing their ideas out there, and you can interact and you can ask questions of them. If you've got questions and things that you'd like to cover on the show, become a member, subscribe, and then hit us up there either on Twitter. You can find us here on YouTube. And I'm going to do something that I do every single week, which is to mention that we continue to work on video. I mentioned earlier today, this is where you're going to be able to see a lot of these metrics come alive, and we're going to be bringing it to you. We have done the work to try and figure out the hardware that we need. We're in the process of getting it to the people that need it so we can actually do the production. And with that, I can actually wrap up this show. I do want to leave on one point here. These are crazy, turbulent times. And if you are someone that's been in the market a long time, you're used to buying the dips, you're used to aping, and you're used to thinking that every time is the now time to go against consensus, take a pause, go feel some grass, get outside, talk to some friends, and just wait a while. Because I think the market opportunities will come back, but they're not really here right now. So take a good listen to what Ray, Benjamin, and Cody had to say today. Breathe, get some air, and then come back to your chart and your screen and think about how you want to approach your strategy. But with that lecture, I'm going to leave you. This is Marconi White signing off. Have a great week.